Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. We got a big snapback again here in the equity markets after a lower overnight, a lower close yesterday, and a lower overnight. Now, that overnight did get below rare major four-star support in the S&P, 43.59, 43.65, but it was never really below there at the opening bell. Buyers stepped in. It was essentially another response, and this time in front of the 50-day moving average, in front of that big area of support. The NASDAQ basically pinged its 50-day moving average, and buyers are leaning into this area. I mean, I talked about and highlighted on the Morning Express today that this has been a trend since the April rally of last year, that these markets respond to the 50-day moving average, and buyers from all shapes and sizes are leaning on that area. So now we moved through our first levels of resistance. Now we're at a big one here for the S&P, 44.11, 44.16. It was support on the way down the early part of the week. Now with some resistance, do we close above there and invite added buying into a friendly Friday, or do we kind of slip back from this into the close? These are answers we'll have to wait to see here as the day plays out. But this is big resistance for the S&P, and then for the NASDAQ, 14,997 is a recurring level around near that round number of 15,000. But there's some nice stocks moving very well. Obviously, the Nvidia after earnings, you're seeing Microsoft make a new record high. A number of big good movers. Adobe, tech is doing really well, leading the way here today. Now, what isn't moving off that low is crude oil. But there is strong support here, 62.50 to 62.90. Now, we're using a couple different levels from the continuous as well as from the October new contract front month. But there's a big area of support. The market's holding it for now, but it hasn't responded to say the equity market has. There's a lot of damage in crude, but the slower growth sort of narrative, the Fed potentially tightening and slowing growth further. It's all weighing on that crude, the sentiment within the crude space. But the China data earlier in the week as well. But there are positives, and we highlight those positives in the Morning Express. So go check that out. What we really at the end of the day need to see is a close back above about 64.5 to start to neutralize what we saw today and yesterday, and then that would just get us into neutralizing that. And there's still some damage from the middle part of the week. Gold and silver, they haven't done much, but they are holding supports for now. Gold did fail at resistance. It did have a nice knee-jerk higher. 17.95 was the high. 96.99 is a major three-star resistance level. We talked about it. Have to close above there in order to invite added buying on the week and heading into next week. But the dollar is in breakout zone. Dollar is moving very well. 93.40 right now. And this is a breakout. It's weighing on the metals, and with gold, it's just sort of being underpinned by this 1780, 1785 area. It's not the low of the session, but it's being underpinned by this. Some weakness in the equities got the treasuries going, lower yields, higher prices, and that helps support gold. Silver, it hasn't done much. Silver, $23 is there some support there that it's responding against. Platinum, we're still bearish, and we think we're going to make a new low in platinum. See how that goes. It did hold a higher low than that Sunday night massacre level there, 954. So keep an eye on platinum. It gets below there. Copper got below $4, but now it's back above $4, sort of underpinned by a couple narratives, maybe some slower production in Chile. So a lot going around. What it comes down to for commodities is the dollar. Does the dollar keep going higher and weighing on commodities? Because again, the ag markets are lower too. Give us a call. Our trade desk is here, 312-278-0500. Remember though, futures trading involves substantial risk of loss and is not suitable for all traders.